Hey folks, welcome to this weekend edition of the Satori Traders Precious Metals News. The reason I am showing Alexco Resources, this is one of my long-term holdings, a large holding, we need to understand, or I believe it is important for us to understand what we are doing in the financial markets before we commit our money. Are we coming in here as day traders and we're trying to, we're going to try to range trade this thing? Are we coming in as investors where we're holding for a longer time frame? Those kinds of decisions. And, do I use trailing stops? Am I just going to keep them mentally? Am I going to physically set a trailing stop? What exactly am I going to do in the markets? Not just, hey, let me go throw some money at mining stocks and see what happens. And I also believe it's important to make those decisions up front. So we're not sitting here when price does something like this. We're not wondering, oh, do I sell? What do I do? We know ahead of time. Ideally, we know before we commit our money in the first place, when am I going to exit the market? What are the conditions under which I'm going to bail on this thing? We're nowhere close to that point for me. Just out of curiosity, let's look at a mod shift or a shift. Those don't really do anything for us. Let's keep rolling. Ethos Gold, in contrast to Alexco, is doing just fine. So this is a weekly time frame, and of course this is a penny stock. We're under 40 cents, but looking just fine. We've got volume generally trending higher. Investors are showing increased interest based on accumulation distribution. MACD in bull mode, suggesting that the primary trend is up. Energy's elevated. So, it's not consistent behavior across the mining stock sector, but wasn't looking very, very pretty last week in general. The metals themselves, this is gold in the monthly time frame. Again, we're filling out right shoulder on the head and shoulders pattern. In the weekly time frame, nothing wrong with this action here. Price is dealing with resistance at both this is the 40-week and the 10-week moving averages. And so, not surprising, this is actually positive action. Price pushed up into those resistance levels and then, pulled back to take a rest. And of course, when price rests, it is gathering energy for its next movement. And my bullish bias, I'm assuming that next move will be upwards. Again, here's gold in the daily time frame, and we really can't fault gold for doing a pullback. This is added $50 in a short period of time. And so this is really not much of a pullback relative to this price gain. Basically it's gold, or price is trying to consolidate this price movement. And so, and again, here we see that, right now gold is dealing with resistance at the 50 and 200-day moving averages here in the daily time frame. Now, on a positive note, Friday's move, stopped at the 20-day moving average and the bottom of our support resistance zone there. So MACD is on a buy signal, but histogram is hinting at potentially a rollover. Energy remains elevated. Silver, same thing. The metal's doing fine. That's the monthly time frame. No changes there. Weekly time frame, same thing. We're just, we continue to build out that flag pattern. Now, I did notice this morning we potentially have a divergence between price action and D. So if we look at, that's kind of our general, our price trend. And then obviously here in MACD, our trend in MACD is downward. And so divergences like this can mark the end of trending moves. They don't have to, but potentially. And I was just reacting to, I said trending. This isn't a trending move by any means. This is a consolidation. So interesting. I'm going to have to look at what does a divergence between price and MACD mean while price is consolidating. That's kind of a geeky thing to dig into. Here's silver in the daily time frame. And so again, Friday we got a strong pullback. If we look, That is 2.5%. So let's remember that Friday silver pulled back 2.5%. MACD's still down in bear mode. Energy is mid-range. So, silver's not looking bullish by any means, and yet remains above its 200-day moving average. So that is a positive in my opinion, that, price continues to find support at that level. We're going to go straight to SIL. Remember this. So Friday we got a 2.5% downward movement in physical silver. SIL, this is our daily time frame. SIL is our proxy for the silver mining sector, and so we can see that's 4%. So on Friday, if you can't see my finger pointing at the screen, if you look up here, on Friday we got a 4% down move in the stocks versus the 2.5% down move in the physical metal silver. So anyway, and again, that's not pretty action. We do potentially have support down here at this is our support resistance zone that we've had some confusing price action in there, but potentially could find support in there. Let's look at GDXJ. This is the weekly time frame. And again, it's splitting hairs. Technically, this is still a higher low. Clearly that's not great action. We got a little bit of a bump in volume, which you never want to see. As a bull, you never want to see volume rising when price is declining. MACD is on a sell signal at this point and dropping back down into bear mode. So a couple of bearish indications from MACD, and of course energy is in the tank there. Hey, okay, and in the daily time frame, again here in GDXJ, what do we get? That was again, there's 4%. So, GDXJ down 4%. What did gold do? Let's look on a percentage basis. See, gold was only 1%. So, in my book, gold is looking just fine. I don't know if I said it. I think I said it last week. In my opinion, what this looks like to me is a strong upward price movement, a 62% Fibonacci retracement, and a resumption of that uptrend. And of course, that's what this is a shift pitch for, showing us that we're in an uptrend. One of the nice things about Andrew's pitchforks is that it always shows us what the trend is. A valid fork always shows us what the trend is. In this case, it is upwards. While we're looking at this, let's notice how steep this fork is. I don't know if that's a 45-degree angle. Anyway, that is a very steep price movement to be continuous. We really, it's not reasonable to expect price to continue rising at that rate for any period of time. And so when we go to a mod shift, or in this case, I think the shift looks a little bit better. It just emphasizes that price is dealing with resistance there at several layers. Let's keep rolling. This is the dollar in the weekly time frame. We can see this still looks like an uptrend and a strong uptrend at that. The dollar has pushed above this. Potentially this was a resistance level at this median line extension. Prices pushed above it last week, closed fairly near its high. We've got this resistance at the median line of this Andrews pitchfork, and then I'm suspecting that this will be a resistance zone up here. 93.5 is the top of that. And so I'm kind of watching for 93.5 and then some kind of pullback. Energy obviously elevated, MACD on a buy signal. Daily time frame just bopping sideways, potentially consolidating this big impulsive price movement here. I continue to keep this is the Fibonacci extension tool of this impulsive price movement. And notice how price is kind of range trading between the 62 and 38% extension levels. So it's kind of interesting how the Fibonacci levels play out in the markets. Let's see, this is the weekly time frame on the 10-year. This is what I was babbling about last week. This is a 62% retracement, Fibonacci retracement of this impulsive movement in interest rates. And so far, that looks like oh my God, big scary change in trend, and potentially that's not the case at all. So we're at the 62% level and at the 40-week moving average, where that if the price or the note wanted to reverse directions, that would be a good place to do it. In the daily time frame, we've got a lot of volatility, choppy action. I was pointing out last week that, to me, my eye, that looked like a capitulation sell-off, followed by a strong resumption of the underlying trend, which in my opinion is upwards. Albeit, notice that MACD is in bear mode, which suggests that the primary trend is down. So conflicting signals there, choppy action. And I'm keeping my eye on this open gap. So price does not like open gaps. And so if we get another leg down, I would expect that gap to be filled. So interesting action in the daily time frame there. Equity markets. So I've dropped down to the 4-hour time frame. This is SPX. I wanted to look at, what's really going on, or a closer look at what's going on and where we might have support for equities. And in this case, it looks like 4,300 is our next support level. Coincidentally, that's our 50-day moving average. It's the median line of this Andrews pitchfork. And of course, it's a round number. You can see it's also a horizontal support and resistance level. Let me zoom in on that just to emphasize that point. So we can see that price came up here. We got a spike into the upper median line of that fork, which coincidentally is 4,300. We got a pullback, another push higher, and then price was able to penetrate that level, but closed a little bit lower. And then on the next bar, we got a gap over that resistance level and then a bullish continuation. Actually, that's more than bullish, it's impulsive. So we can see, we got a fairly wide-ranging bar closing almost on its high, followed by another one almost on its high, another gap, big bar closing fairly near its high, and then we're running out of energy up here. That we could actually describe as a runaway gap. So anyway, very, very high price action, high energy price action there on the other side of that resistance level. Now we come back down and test that level as support and find support, and then do another leg, another big leg, higher, even higher than the previous leg. And so now we're in the pullback correction, and reasonable to expect that there will be some level of support. Actually, I suspect fairly strong support at that level. MACD rolling over, sell signal, still in bull mode. And again, this is 4-hour time frame. Energy declining a little bit. Let's see, in the Dow, again, we're in the 4-hour time frame because I wanted to take a closer look, and notice that the Dow was unable to make a new all-time high. So in contrast to both SPX and Nasdaq, where we got a series of new all-time highs, the Dow struggled to reobtain its prior high and was unable to better that level. And now it appears we could be selling off from that level. So a sell signal in MACD, energy declining. I was wanting to look at what might be a downside target, and obviously it's the moving averages. What is that? 34 and 400. So call it 34.4 down there at the moving averages. Nasdaq, this is still in the daily time frame. I wanted to emphasize how overbought we are in the equity markets in general, and certainly in the Nasdaq. Price is continuing to be more bullish than the other equity markets. We've so far just got to pull back to support on the 20-day moving average, which is coincident with the median line of this fork. So right now, this is a pretty mild looking pull, but we have to keep in mind that we're very overbought based on MACD, energy declining there. Brent, we got to pull back to the 50-day moving average. Price is bouncing from there. Doji on Friday. Bitcoin is interesting. So, as I look at the news throughout the week, when I see articles that catch my attention, I read them, and sometimes they spark me to go off and do some research. One of my recent research topics has been the cryptos. And of course, Bitcoin has always been my proxy for the crypto space, which, when we're talking about 5,000 different animals in the crypto world, using a single vehicle as proxy for 5,000 vehicles, probably not a very good thing to do, but that's what I'm doing nonetheless. And, we can justify that. Bitcoin is obviously the oldest of or best known certainly the best known of the cryptos. So in my eye, this volume behavior, this is clearly downtrending volume behavior. It's kind of become indifferent in the last couple of weeks. This is just, it's no real trend there in volume. And coincidentally, that's what price is doing. So this is kind of neutral. Price action is sideways. Volume action is neither falling nor rising. So from a volume perspective, we may have changed out of this downtrending action into something else. Clearly, no signs of a resuming uptrend, at least at this point. Energy in the tank. MACD still in bear mode. Notice this red line that I've got. That's the 12th of May. Let's look at another chart. This is Tether. It's the market cap of Tether. So not the price of Tether, but the market cap of Tether. One of the things I've been finding as I dig into the crypto space is the idea that tethers are basically being created out of thin air, with the claim that every tether is equivalent to $1. And so far, everybody in the crypto, well, I won't say everybody. So far, the crypto space is believing that tethers are worth $1. We may or may not find that to be the case. We do have the U.S. regulators at least talking about taking a look at the stable coins. That's based on my understanding. Tether falls into the stable coin market. Oh, so anyway, the reason I've got 12 May on this chart is that I wanted to look at, okay, if they are printing these things out of thin air, is there a correlation between a rising market cap in Tether and the price of Bitcoin? And so we can see, here's the trend in Bitcoin is certainly up, and we reached, $64,000. And then, you certainly wouldn't bail on coin because it did that. That's just a correction and potentially an ongoing uptrend. But now this is clearly a behavior change on the other side of 12 May. And so is there a correlation between those two charts? When they stop creating tethers out of thin air, if that's what they're doing, does Bitcoin stop going up? And so I don't have the answer to that question, but some of the stuff that I'm reading suggests that may be the case. The people that created both Tether and Binance, which is an exchange where you can trade Tether. Isn't it interesting that both Tether and Binance are created by the same people? I think there's 3 of them in particular, and if you dig into their pasts, all of them are shady. So interesting, the Tether and Binance and it to Bitcoin and the rest of the cryptos. So just something to watch. Where there's smoke, potentially there is fire. I'm not invested. I got 0 crypto, so maybe I'm the dummy in this case. We'll see. Talk to you soon, folks.